What's up guys, I'm Grant. I blew through $650,000 and have rebuilt myself from zero so I don't waste any time on theory. If you're new here, please subscribe to the channel because I break down investing in a way that's actually simple, practical and proven to work. Everything I share here is based on my own experience and how I invest my money. It's for learning and discussion purposes, so always do your own research before putting any money to work. A lot of people want to invest but they don't because they honestly just don't know how to participate. The apps, the terms, the process all feel so confusing, so they overthink it and end up doing nothing. If you've been watching the market and thinking, I should probably start, but I don't want to mess this up, well, this video is for you. I'm going to show you exactly how to buy your first stock, step by step. Not theory, not hype, just the actual process, so you can finally take action with confidence. Let's get into it. All right, first things first. Before you throw any money around, you've got to understand what you're actually doing here. When you buy a stock, you're literally buying a piece of a company. You become a part owner. You could own a tiny slice of Apple, Tesla, whatever. When the company makes money, you make money. And when it struggles, you feel that too. My first rule is this: don't invest any money you might need within the next 6 months. Seriously. The stock market isn't a casino or a TikTok trend. It's a wealth building machine, but it only works if you have the discipline to stay in the seat. I'm talking a minimum of 5 years, ideally 10 or more. And there's another practical reason for that. Once you hold investments for over a year, the taxes you pay are usually much lower compared to short-term trading. If you're going to need that cash soon, put it in a high-yield savings account instead. But if you can leave it invested and let it compound, that's when the real growth happens. I bought tech stocks back in 2020 and 2021 when markets were crashing during COVID. Now some of those positions are up 150 to 200% now. But that only worked because I didn't need the money. If I'd needed cash at the time, I wouldn't have been able to sit through the worst part and benefit from the recovery. That's why you should always invest with money you can truly leave alone. There are a bunch of apps you can use to get started, like Robinhood, Fidelity, Charles Schwab, E-Trade or Webull. They all let you buy stocks, but the reason these platforms work well for beginners is pretty simple. Most of them are commission-free, which means you're not paying fees every time you place a trade like people used to years ago. That makes it much easier to start small and actually participate. They're also designed to be usable. Platforms like Fidelity and Schwab are more robust and reliable if you want research and long-term investing, while Robinhood and Webull are cleaner and more beginner-friendly, which helps if this is your first time buying a stock. On top of that, these platforms support fractional shares, so you don't need hundreds of dollars to buy a full share of a company like Apple or Google. You can start with $5 or $10, get familiar with how everything works, and build confidence before putting in more money. All right, now you've got to put some money in. This part's pretty straightforward. You go to the transfer or deposit section in the app, pick how much you want to move from your bank account, and hit send. Most platforms will let you start with as little as 10 to 20 bucks, which is perfect if you're just testing the waters. Pro tip, start small. Seriously. Don't dump your whole paycheck in here on day one. Start with like $50 to $100, learn how it works and get comfortable. You can always add more later. One thing to note, transfers usually take 1 business day to clear. So if you're trying to buy a stock right now, you may have to wait a bit. Some apps give you instant buying power while the transfer processes, but not all of them. So okay, let's get to the fun part, actually buying your first stock. I'll use Robinhood as an example, but the steps are basically the same on most platforms. Open the app and tap the search bar. Type in a company that you already know, Apple, Nike, Disney, whatever. So let's say we'll go with Apple, the ticker AAPL. You'll see the current stock price. In 2025, Apple trades around $270 per share, depending on the day. If you're thinking, I don't have $270, that's totally fine. On Robinhood, you can buy fractional shares, so you can invest $10, $20, or any amount you're comfortable with. Tap buy, enter the dollar amount you want to invest, and choose your order type. A market order means you're buying immediately at the current price. A limit order means you only buy if the price hits a level that you set. For your very first purchase, a simple market order is usually fine. Review the order, make sure everything looks right, then hit confirm. And just like that, you own your first stock. Before you hit buy though, you need to be clear on one thing. Are you buying this as a short-term trade or are you investing for the long term? That decision matters. If you're investing long term, daily price swings doesn't really matter and it's much easier to stay calm when the stock goes up and down. If you don't decide this up front, every small move will mess with your emotions. Knowing your time horizon before you invest is what helps you handle market volatility without panicking. What is worth buying exactly? Well, if you're a total beginner, I'd start with an index fund or an ETF, something like VOO, which tracks the S&P 500, or VTI, which gives you exposure to the entire US stock market. These give you instant diversification. Instead of betting on one company, you're now spreading your money across hundreds of companies all at once, which makes things much simpler and lower risk for beginners. If you really want to buy individual stocks, stick to companies you actually understand and use in real life. If you use an iPhone, Apple makes sense. If you shop on Amazon, Amazon makes sense. The key is understanding what you own. I would stay away from hype stocks, meme stocks, or anything that's blowing up just because it's trending online. Those come with much higher risk. If you want to learn more about things like dividend stocks, growth stocks, or other strategies, drop your questions in the comments and I'll break them down in a separate video. But if you're just starting out, ETFs are usually the simplest and most beginner-friendly place to start. The hardest part isn't actually buying a stock. Anyone can download an app, fund it with $50 or $100 and place a trade. But once you make that first purchase, that's when the real learning begins. You start paying attention to how prices move, how your emotions react, and how important discipline really is. From there, you'll need to learn how to manage your position size, how to think about risk, and when it makes sense to take profits or cut losses. These aren't one-time lessons. They're trading and investing habits you'll be working on for the rest of your life. So don't rush it. Investing is a marathon and not a sprint. Stay consistent and stay calm during market swings and focus on building good habits over time. That's how you actually get better and stay in the game long term. If you found this useful, make sure to like and save the video, subscribe and turn on notifications, because in future videos I'll systematically break down the more important stuff too, like risk management, position sizing and long-term investing discipline. I'm Grant and I'll see you in the next one.